Good morning, Wall Street winners. It is Thursday, March the 20th, and what a day we had yesterday. It was all about the U.S. Federal Reserve Chairman Jerome Powell and the interest rate announcement, and it came in as expected with no increase or decrease. They're keeping rates where they are. But what was interesting about it was his comments about the economy and his concerns around the potential increase in inflation and the potential impact that tariffs will have. Now, he wasn't saying that he didn't go into great detail. He was just concerned. And that was an interesting little, addition to or focus of his speech. Because he is looking at data that is historical. So he almost appeared as though he was handcuffed a little bit in the sense that he is independent from the White House and the president and the current administration. So there's not really, there's an intention not to have collaboration between those two, to leave the Fed as an independent body. And they have a dual mandate, which is employment and lower inflation or low inflation. And that is really something that they control primarily through the movement of interest rates. And we're seeing that we just had the jobs numbers come in this morning, and the U.S. jobless claims for the last week came in at 223,000, which was 1,000 lower than estimated. So that's good, but it doesn't really tell us a great deal, because if DOGE has laid off thousands of people in the government or packaged them out, the original offer, as I understand it, was to package them out till June. So we won't see any huge ripple effects in unemployment or unemployment claims until that point in time. We're seeing sporadic announcements about large companies like Morgan Stanley yesterday, I believe, came out with an announcement saying they're laying off 2,000 people. And it didn't say immediately, but probably through the course of the year. We're seeing probably less hiring going on, long-term hiring, especially in different sectors, automotive for sure, with all of the potential upheaval around the Canadian-Mexican borders with car manufacturing. There's just, again, a tremendous amount of uncertainty, but the data is all rear-view mirror data. It's all backwards data. It's not leading indicators, it's lagging indicators. So what we're ultimately unable to do is, or what the Fed is ultimately unable to do, is make a proactive decision to help avoid things going forward. It has to wait for an event to occur, get data points on it, and then react to it. And that's the situation that we're in right now. We're hearing that April 2nd, the day that tariffs come in, is going to be a day of great change in the United States from President Trump. And it's when America will begin to be made great again. So we'll have to wait and see what his plans are and what his vision is around that. But we are seeing some additional negative sentiment. So today in the market, we saw the Canadian small business numbers were, not numbers, but the Canadian small business optimism collapses to a 25-year low. So clearly the potential impact of tariffs is definitely affecting optimism amongst small and mid-sized business owners in Canada. We're also hearing from a number of Americans throughout the US that they are definitely concerned about what these tariffs are going to do. And a change like this, could end up being quite beneficial. But at the same time, the risk here is that before it becomes extremely beneficial, if it does end up being beneficial, it's going to create a tremendous amount of turmoil, and it's going to not break, but definitely put a lot of stress on the current economic system as we know it. And that is likely going to cause the markets to drop before they recover. So that's where we are. We're still in this volatility spiral, not knowing really where we're headed. And with the way in which the tariffs have been implemented and the on again, off again strategy initially deployed at the White House, there's still some belief that these tariffs coming April 2nd may just be a negotiating tactic. I don't think that's the case. I think that you're misleading yourself if you believe that. But I mean, hey, we don't know. So everybody's entitled to their belief. Anyway, if we flip to the markets and see where we are today and look at the futures are all in the red. So yesterday was a weird day. I started off saying yesterday was a weird day. Why was it a weird day? Well, no announcement was made by no change was made by the US Fed. He did come out and make some different statements from normal in the press release and the question and answer period. But the market shot up, and they shot up for no real reason. There was no news event that would indicate the markets should go higher. I thought they were going to go lower, coming out with no change type of announcement. I was clearly wrong. They shot up 1% or so, and had a great finish to the day. But today they're in the red, and they're likely to pull back as we continue on into next week and into April. Obviously, there's going to be days where they're green, and then probably more days when they're red at this point, as we're in a bit of a correction. So again, the way to play this is to buy a put when the market goes up. So on a green day, buy a put on an index like the S&P 500, like the SPY or the NASDAQ or some index that you follow. And then when the market drops, probably the next day or the day after, sell the put and close it out and take your profits, and then wait for that to happen again. And now when it drops, you could buy a call to say it's going to go up in the next week or two, and keep these short term, try to maybe buy them just in the money or just out of the money, so that the spread, the distance or the amount of change that has to occur isn't that great. And that's one way to play this market. So we've got some earnings today. We've got Nike coming out today after the market close. We've got FedEx coming out today, which is a big one. And we've got Micron. So those will be interesting to hear from. If we take a look at where we are in the Yahoo Finance app, we can see that across the top here, crude is just above $67 a barrel. We have the NASDAQ's obviously down. The VIX is up slightly, but it's still below 21. As we scroll down through health and retail, you can see retail had a pretty good day yesterday. Again, this is a great example of when retail has a good day prior to tariffs coming in, which is April 2nd, I would be looking to buy a put on retail. Now, you could do it on an individual stock or you could do it on a retail index, but buy a put when it goes up and then buy a call when it goes down and sell the put. Healthcare just kind of fluctuating there, on and off, good and bad yesterday. Not a lot to talk about. Transport's just getting hammered, so I'd be staying away from that. Oil and energy doing pretty well, actually, all things considered, with crude where it is below 70. It had pretty green on the screen day yesterday, with the exception of Consolidated Edison, which started off below its previous close, but then came back and then drove again. But it closed near where it was before, up at 107.50, call it, is a pretty good price for that company. It was down at 100 within the last 2 weeks. All of the others probably going to move up today with crude being higher. So with crude being up and in the green, we're probably going to see a positive day for oil and energy there. In tech had a pretty strong day yesterday, closing up, but it looks like it's definitely going to be pulling back today. If we go across the big names here, so the QQQ is one of the ETFs that I am buying puts and calls on. So this is one example of that. So I would be, example, yesterday at the end of the day, I would buy a I'd buy a put at say 480 or 479, good through till next Friday, maybe the following Friday, but March 28th is the date that I've been working with this week. I'll probably start to push that out a week as of today, because tomorrow is going to be 1 week away at that point. and then I'll wait for that QQQ to drop below. Maybe it'll get down to the 476 today. And if it does, my put should be in the money and I'll sell that. And depending on where the market goes, maybe I'll buy a call going into next week. Highly unlikely. I'm going to focus more on puts because I feel like we're on a bit of a downward path and the likelihood of catching an upward tailwind is highly unlikely at this point. Hey, if you're liking these videos, by the way, please hit the like and subscribe button. I put these out daily and I hope you find them useful. If we continue to scroll down, just look for anomalies more than anything. One is Baba. So Temu, I'm not sure if you're familiar with Temu, but Temu's kind of like, it's an online platform for e-commerce out of China, and they sell all kinds of fairly inexpensive goods. I think of them kind of as a dollar store of e-commerce. They are owned by Tencent and, PPD, I believe. PPD announced earnings today, or was it Temu? Either way, they were down. So the transaction volume is declining there. And that's kind of bucking the trend of Chinese e-commerce, because they were on a pretty positive comeback this last couple of months, and Alibaba was up because of that. Now Alibaba's off $6 in the pre-market. So that's a pretty big move to the downside there for Alibaba. Meta has been having some pretty bad days. One announcement that came out yesterday was from ARK Investments, and I'm not sure if she's CEO or CIO, but Kathy Wood announced that they have been selling off their position. Meta, one of the Mag 7, was the only Mag 7 stock to maintain its profitability in 2025 through stock appreciation, but it has now reversed that and is back to basically even or having lost money, is down from where it started at the beginning of the year. So it's caught up with the rest of the Mag 7. We've got NVIDIA, which had a good day yesterday, but is off slightly this morning. Google, again, off. And that's after the announcement yesterday. They were buying Wix for additional security as a component to tie into their whole platform. And then TSM. So TSM, oddly enough, is one of the ones that's up this morning. And then we go down to financials. And financials had a good day yesterday as well, but most of them are off this morning at the same time. And what we're not hearing out of the Trump administration, which we may hear on April 2nd, is the whole deregulation of the financial sector. We've heard a little about crypto and the whole idea of a crypto stockpile, and we've certainly seen the SEC drop some lawsuits, particularly against XRP, which XRP was filing, again, a counterclaim against an appeal. But we see that with the lack of discussion around tax cuts and deregulation in banking, the banking sector has suffered, but I do expect that we're going to see some great trading gains and revenue from these companies as we start to get their quarterly results in early April. So this might be one of the bright spots for April, and there may not be many bright spots for April. So keep an eye on these and maybe consider a call option that goes to, say, April 21st or April 28th, somewhere in there, towards the end of April, for some of these financials that are reporting. Make sure you buy that post their earnings date. So you don't want to buy it before the earnings date, the call option expiry. You want to keep the expiry after the options date. That might be something to consider for some upside, but I do think as we get to April 2nd, you might see a further slide in everything. So you might want to hold off on that until we get past that further slide so that you can increase your gain and have some momentum there. So that's where we are today. I really wish you good luck in your trades. I hope you're making some money and at least maintaining your capital through these turbulent and volatile times. But good luck, and if you like the videos, please hit the like and subscribe button.